The Fed's on hold, but are your everyday money tools still changing? We crack the code on interest rates and how they're secretly impacting your wallet right now. Hey everyone, and welcome back to your channel. Today, we're diving into the world of interest rates, specifically how they affect your wallet. Even though the Federal Reserve seems to be taking a break. Remember that big central bank that everyone talks about? The one that raises and lowers rates to keep the economy in check? That's the Fed, and yeah, they last budged on rates in July 2023. But here's the surprising thing. Interest rates on your everyday financial tools are still on the move. Let's break it down. Inflation, that pesky thing that makes your grocery bill scream, has cooled off a bit from its summer 2022 peak. But it's still hanging around 3%, which is higher than the Fed's sweet spot of 2%. This means the Fed is likely holding off on rate cuts many expected this spring. So, what does this mean for you? Buckle up because we're about to explore the fascinating world of interest rates in 4 key areas: savings accounts, certificates of deposit, CDs, credit cards, and mortgages. First up, savings accounts. Here's the good news. Higher rates mean banks are giving savers a bigger slice of the pie. Ted Rossman, a credit card guru at Bankrate, calls this a silver lining. The top savings account rates are currently hovering around a whopping 5.35%. That's way above the national average, which is still decent at over 0.6%. Even better, many online high-yield savings accounts still offer close to or above 5%. These accounts are perfect for keeping your emergency fund easily accessible while it grows. Win-win. Now, let's talk CDs. These are like little contracts with your bank where you agree to lock up your money for a set period in exchange for a guaranteed interest rate. While savings accounts are seeing a boom, CD rates have softened a bit recently. But they're still a good option if you're okay with your money being untouchable for a while. Rossman says this sweet spot for savers will likely last until the Fed finally starts cutting rates. Alright, here's the not so fun part. Credit cards. Buckle up because these guys are expensive. The average credit card rate has been chilling above 20% for the past year, and that party isn't ending anytime soon. The key takeaway? Credit card debt is a beast. Even when rates eventually come down, they'll still be high. Rossman's golden advice? Pay down that credit card debt ASAP. One strategy? Balance transfer cards. These cards let you move your debt to a new card with a low introductory rate, giving you some breathing room to tackle that balance. Finally, let's talk mortgages. Unlike savings accounts and credit cards, mortgage rates are more like weather forecasters. They try to predict what the Fed will do. Since mortgage rates tend to follow the 10-year Treasury yield, they started moving even before the Fed took a break. Remember those crazy high mortgage rates in October 2023? Yikes. Thankfully, they've been on a steady decline since then. After a little blip in February, they are settling back around 6.6% for a 30-year fixed-rate mortgage. Here's the exciting part. Experts predict that the rate could drop to around 6% by the end of the year. This would be a huge sigh of relief for the housing market, which is currently a bit tense. Lower rates could convince some homeowners, who are locked into fantastic rates from years ago, to finally sell their homes, which would increase much-needed housing inventory. More houses on the market could lead to some price relief for potential buyers. Woohoo! Alright, money superstars, that's all she wrote about how interest rates are still shaking things up for your cash, even though the Federal Reserve is taking a break. Now you're like a financial ninja, ready to make your money work for you. But here's the thing. Knowing this stuff is only half the battle. We want you to win the money game. So, let's chat in the comments down below. Are you stacking those bills high with those excellent high-interest savings accounts? Did this video give you the push you needed to slay that credit card debt finally? Share your money wins, or cries for help. We're here to cheer you on and answer any questions you have. And hey, if you liked what you saw, smash that like button faster than you can say, cheaper mortgages. Remember to subscribe for more awesome money tips, and hit that notification bell so you can catch all of them. Remember, money can be tricky, but together, we can make it work magic. Until next time, stay financially fabulous.